Joining me right now is Oxbow Advisors Managing Partner Ted Oakley. Ted, good to see you. Thanks so much for being here this morning. What is your reaction to the earnings season so far?
Well, it's been mixed, Maria. I think one of the things that's coming out on it is that some of these companies are saying, you know, we did okay, but I'm not certain about the first quarter. And I think you're starting to see some of that as well.
Do you think that the economy is going to see growth? We're waiting on the GDP tomorrow. Of course, the Federal Reserve is watching interest rates as well as the inflation levels. And the 10-year Treasury this morning is looking like this, about 4.2% or so, as 10 Federal Reserve officials are expected to speak this week. What are you expecting from the Fed, Ted? Kansas City Federal Reserve President Jeff Schmidt said there's no rush to cut rates right now. He remains focused on the threat of inflation. And as I mentioned, the yield is now down 1.5 basis points at 4.27%, ahead of that second read of fourth quarter GDP out tomorrow and the PCE index out on Thursday.
Well, you know, Maria, I think Chairman Powell sort of threw them a lollipop in October and got everybody thinking it was all going to be great. And then all of a sudden they had to backtrack. And I think right now they're sort of stuck between a rock and a hard place, because if you look at where employment is and certain things, and then you've had PCE, CPI have big months in January, I think it's going to be hard for them to lower rates right here. It wouldn't make any sense, I don't think.
Yeah. Chris, what do you think about that? Tell us what you're doing there at Aquinas.
I think we're thinking similarly to Ted. We don't know. I'd be interested in his insights. When you think the consumer is tapped out, you know, consumer debts are at all-time high. We don't think we're going to see an interest rate cut anytime soon. So at some point, enough will be enough. Ted, what are your thoughts? Do you think we're going to see the consumer not be able to go into his pocket anymore and make those radical purchases?
Well, you know, Chris, it's interesting. You know, if you look at a lot of companies that are announcing right now, they're announcing that people are trading down in their own products. You know, they're starting to trade down. You're seeing it like you walk in restaurants down 12% for the year. And I think the consumer is really starting to get under pressure right now. And we'll just have to see if it continues. But if it does, we will probably have a fairly weak consumer quarter eventually.
Well, I'm glad you mentioned that consumers are going to trade down, because I want to spotlight Temu this morning. This is the Chinese retailer that is trying to take market share from all of these discounters. Remember, on the Super Bowl, Temu had at least 3 Super Bowl commercials. This is a Chinese company, and there is pressure to ban this company because of surveillance. I've got a note here from Cowen and Company, which came out on Friday, and here's what Paul Gallant writes from Cowen. Congressional pressure to ban Temu. On Friday afternoon, The Information reported that key members of Congress were pressing the Department of Homeland Security to put Temu on the entity list over forced labor concerns. The analyst says, I can't rule that out. Biden prioritizes human rights, and public sentiment is strongly anti-China. So he might be tempted to act versus Temu. Your thoughts? This is Pinduoduo, this Chinese company, which is the parent company of Temu. And this stock has been on fire in 2023 as it seeks to gain market share from the likes of Walmart and Five Below and others. Ted, your thoughts on Temu and whether or not we could see a ban here? Look at this stock.
Well, Maria, I suppose you could. I haven't followed it that closely, but I would say this. If they're going to start picking on forced labor, there's a lot of companies they need to take a look at if that's the case, I think, in general, from China.
Cheryl, the report says, I think Temu ban is unlikely in the near and medium term, writes Paul Gallant, because of litigation risk, Biden's reelection calculus, and other values. Don't forget, even after this administration told us that TikTok was surveilling us, Joe Biden starts doing TikTok videos.
Right, because, again, the genie's out of the bag with regards to TikTok, but also, Ted, the genie's out of the bag when it comes to investments in China. I mean, you have political pushback on China, concerns about national security, whether it's the border or other issues from China, and spying on us thanks to these Chinese nationals. At the same time, though, Wall Street will not get off of their lust for money, and that comes to the Chinese investments doing business in China. We have not seen that slow down at all. Is that even a concern among investors anymore, at least on the street?
Well, I know for us, we really stayed away from China the last 15, 18 months. And it's been under pressure. The markets have now.
Oh, yeah.
As far as the investment banking business, that's a chance they do more of that. But I know on the market side, that's not something we've been interested in.
Yeah, now I just wanted to mention it. I thought that was really interesting that there's congressional pressure now to ban Temu. We'll keep a watch on it. Ted, it's good to see you this morning. Thank you, sir.
Thanks, Maria.
Ted Oakley joining us.
Hello everyone. I just want to say, if you like this video and you want to see more of this type of information, because we really try to get the information that you don't see from anybody else, then be sure and click on subscribe and you'll see more of what we do here at Oxbow.